Good morning everyone. In today's video we will talk about money market in India. In the previous video we have already dealt with financial market, where we understand that the market of an economy where the funds are transacted between the fund surplus and fund scarce individuals and group is known as financial market. The basis of transaction is either interest or dividend. The market might have its organized as well as unorganized segments in an economy. The financial market in every economy are having two separate segments today, one catering to requirement of short-term funds and other to the requirement of long-term funds. The short-term financial market is known as money market, while the long-term financial market is known as capital market. जैसा कि हमने प्रीवियस वीडियो में देखा था कि फाइनेंशियल मार्केट एक ऐसा प्लेस है जहाँ पे जिसके पास फंड्स सरप्लस है वो अपने फंड्स दे सकता है जिसको फंड्स की रिक्वायरमेंट है, जिसके पास फंड्स स्केयर है। तो द इन्वेस्टर जो भी इंडिविजुअल्स है जिनके पास सेविंग्स है वो अपनी सेविंग्स इन्वेस्टर्स को दे सकते हैं। ये ऑर्गेनाइज्ड भी हो सकता है, अनऑर्गेनाइज्ड भी हो सकता है। और जो नॉर्मली जो फाइनेंशियल मार्केट है उसको हमने दो कैटेगरी में डिवाइड कर रखा है। शॉर्ट टर्म फंड्स जो शॉर्ट टर्म फंड्स में डील करते हैं और एक जो लॉन्ग टर्म फंड्स में डील करते हैं। शॉर्ट टर्म फंड्स में जो डील करते हैं उनको हम ऐसे मार्केट्स को हम मनी मार्केट्स कहते हैं। एंड द मार्केट विच डील्स विथ लॉन्ग टर्म फाइनेंशियल मार्केट आर known as capital market. So business can raise funds through various ways and many sources through financial market. A financial market helps mobilize funds between savers and investors. The work of allocation is done by two intermediaries, which can be bank or financial market. The bank can deposit money of savers and lend to the business, or alternative is buying of shares or debenture of company using the financial market. In the previous video we also discussed about the functions of financial market, where we understood that the financial market, the main function of financial market is to mobilize the saving and channelize them into the most productive use. Now in this video we will be discussing about money markets. मनी मार्केट ऐसे फाइनेंशियल इंस्ट्रूमेंट्स में ट्रेड करता है जिसकी जो मैच्योरिटी है वो लेस देन 1 ईयर हो। सो मनी मार्केट इज़ अ शॉर्ट टर्म फाइनेंशियल मार्केट ऑफ एन इकोनॉमी. In this market, money is traded between individual or groups who are either cash surplus or cash scarce. Trading is done on a rate known as discount rate, which is determined by the market and guided by availability of and demand for cash in day-to-day trading. The repo rate of time works as a guiding rate for current discount rate. In money market, the financial assets which have quick conversion quality into money and carry minimum transaction costs are also traded. So that's it for the money market. Now let's see, why is money market important? What is the need of money market? In the modern industrial economy, creation of productive assets is not an easy task, as it requires equitable capital of long-term nature. The long-term capital can be raised either through bank loan, corporate bonds, debentures or shares. But once a productive assets has been created, the production starts, there comes the need of another kind of capital to meet the day-to-day shortfall of working capital. It means that only setting a firm does not guarantee production, as these firms keep facing fund mismatch in day-to-day production process. Such funds are required only for short period and are needed to meet shortfalls in working capital requirement. This requires creation of different segment of financial market which can cater to the short-term requirements of such funds for enterprise, known as money market or working capital market. Normally the short-term period is defined up to 164 days, less than a year. So we have discussed that the money market is an essential component of financial market for buying and selling of securities of short-term maturity of 1 year or less, such as treasury or commercial paper. Now let's talk about money market in India. The organized form of money market in India is just close to 3 decades old. However, the presence have been there but restricted to government only. It was the Chakravarti Committee 1985 which for the first time underlined the need of organized money market in the country, and the Vahul Committee 1987 laid the blueprint for its development. Today, the money market in India is not an integrated unit but has two segments, that is organized money market and unorganized money market. Now let's talk about unorganized money market. Such market is not under the control and managed by RBI. So before the government started the organized development of a money market in India, its unorganized form had its presence since the ancient times. It remains still present in the country. Their activities are not regulated like organized money market, but they are recognized by the government. In the recent years, some of them have also been included under the regulated organized market. For example, NPFCs were put under the regulatory control of RBI in 1997. The organized money market in India may be divided into three different categories, that is unregulated non-bank financial intermediaries. Such institutes are functioning in form of chit-chats, nidhis or loan companies. They charge a very high interest rates thus they are exploitative in nature and have selective return in economy. Then comes indigenous bankers. Indigenous bankers receive deposits and lend money in the capacity of an individual or private firm. There are basically 4 such bankers in the country functioning as non-homogeneous groups, that is Gujarati Shroff, Multani Shroffs, Marwari Kayas, Chitras, etc. Then comes money lenders. They constitute the most localized form of money market in India and operate in the most exploitative way. They have their two forms. First is professional money lender who lend their own money as profession to earn income through interest. Then is non-professional money lender who might be a businessman and lend their money to earn interest income as a subsidiary business. Then we have organized money market. Such market is a systematic market and are controlled and coordinated by RBI. Since the government started developing the organized money market in India, we have seen the arrival of total of 8 instruments designed to be used by different categories of business and industrial firms, namely treasury bills. This instrument of money market, though present since independence, got organized only in 1986. They are used by central government to fulfill a short-term liquidity requirement up to the period of 365 days. Then we have certificate of deposit. Organized in 1989, the certificate of deposit is used by banks and issued to the depositor for a specified period ranging less than 1 year. They are negotiable and tradable in money market. Since 1993, the RBI allowed the financial institution to operate in it, that is IFCI, IDBI, etc. An Exim Bank. They can use certificate of deposit for maturity period above 1 year and up to 3 years. Commercial papers. Commercial paper were organized in 1990. It is used by corporate houses in India. Then we have commercial bills. Organized in 1990, the commercial bills was issued by All India Financial Institution, non-banking financial companies, scheduled commercial bank, merchant banks, corporate banks, mutual fund. It replaced the old bill market available since 1952 in the country. Next is called money market. It is basically an interbank money market where funds are borrowed and lent generally for one day. That is why it is known as overnight borrowing market. Funds can be borrowed, raised for maximum period of up to 14 days. Money market mutual fund, popularly known as mutual funds. This money market instrument was introduced or organized in 1992 to provide short-term investment opportunity to individuals. Then we have repo rates and reverse repo rate. In the era of economic reform, there developed two new instruments of money market, repo and reverse repo. Repo allows the bank and other financial institution to borrow money from RBI. In reverse repo, the banks and financial institutions purchase government securities from RBI. Then is cash management bill. The Government of India, in consultation with RBI, decided to issue a new short-term instrument known as cash management bill since August 2009. To meet the temporary cash flow mismatch of the government, the cash management bills are non-standard and discounted instrument issued for maturity of less than 91 days. That's all for today. We will talk about these instruments in detail in upcoming video. Thank you for watching.